Alrighty, g'day mate. Shall I throw a pip on the bobby, Phil? It's Tuesday, August 7th, 2018. This is your daily Forex trading strategy session. Crikey! Really? Anyways, hey, ni hao, Daniel. Ni hao. Anyways, hey, good morning, everybody. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small. Stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay. That means I have the ability to align not just technical and fundamental analysis, but financial markets and capital markets. And I'm here with the overriding goal of helping you put together trade plans, and more importantly, helping you become an independent trader that can analyze all such things previously stated and make your own decisions on how to trade as a profitable independent currency trader, which is one of the most amazing blessings that anyone could possibly offer you. Imagine that you don't have to commute to work. Imagine that you don't have a boss that's an idiot. Imagine that there isn't some person in the office every day at 3:45 burning a bag of popcorn in the microwave and stinking the whole place up for everybody. Imagine you just don't have to waste time and money doing those types of things that regular folks do. And then what do they do after that? After work, they drive to the grocery store. And they get in the grocery store filled with the same idiots. So you get to be liberated by all of that if you can find a way to become a successful independent currency trader. You can work a few hours and then you say, you know what, I need a break, grab your cup of coffee, go sit outside with nature, with sun on your face. Don't waste an hour driving to work and an hour driving back to work and an hour in a grocery store and all that rat race kind of stuff. So anyways, that's what I offer you. So I do these sessions 7:30 in the morning, Monday through Friday. And I'd like to thank you for being a client of TradersWay. Throw your diamonds in the sky. If you haven't joined our family, please do. Visit TradersWay.com, open up a demo account, give us an opportunity to earn your loyalty and respect, test out our execution speed, check out our competitive spreads, try things like an ECN account or a variable spread account or a fixed spread account. And if you need it, contact customer service and I don't know, like I said, fall in love with us, or at least give us an opportunity to earn your loyalty and respect. So nice to meet you anyways. My name is Wayne. I'm a currency trader. I'm just like you, except I'm probably 10 or 15 years ahead of you. But I bet you can get here faster. So let's go over here. You should see some pretty colors. What do you think? Yeah? Hope you don't mind if I eat an apple. I'm sorry. I was just in that mood this morning where like I was hungry, but I didn't want to eat food. So now I want to eat food. All right. This is euro dollar. We did some amazing analysis recently. And we said, this is, oops, come on, drawing tool. Let's do it this way. We said if you're a bear, this was a sell zone and this was a sell zone, right? If you're a bull, this was a sell zone or this was a sell zone. So you just have to ask yourself, did you get an opportunity to buy here? And the answer to that is probably no. Did you get an opportunity to buy here? And the answer is probably yes. Okay. Is that right? We met in South Africa. You know what? I miss my South African brothers and sisters. I had a really good time there. I keep thinking like there should be an opportunity sometime soon to go back and do the follow-up that we talked about at that time. Can't believe that was 2016. I won't have time to do something like that for at least 6 months, though. I have a California trip coming up, and then I'm going to Cambridge, and then I'm going to Cambridge, and then I don't know. So, anyways, so yeah, so here we are. Pretty interesting opportunity, right? And you can see how we came to this conclusion, because when we were in here, I was just simply, I think it might have been right before non-payrolls. I did a discussion about trading your plan, trading your bias, and all that kind of stuff. So it was pretty simple. You know, these are bearish areas. Everything in between is very, very mediocre, and therefore mediocrity is a form of risk. In here, very supportive, right? Everything else is pretty mediocre, and mediocre is risk, right? But can you see how you start with that first? So here we have support, 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 support. You don't have to be a rocket surgeon to see that, right? So I dragged that across. And remember, I did this Friday of last week, right? And then what about this zone down in here? I know I'm pretty zoomed out, so bear with me, but we'll zoom in a little bit later. But is this, generally speaking, a supportive area? In your analysis, you're using your technical analysis skills, would you say that the red area that I just highlighted is generally support? Or take profit? Yeah, well, same thing if you're a bear. Like this was an obvious sell, right? You guys remember that one? I mean, look at how crazy this is. Of course that's a sell, right? So if you had a trade plan, I think I was sharing that idea at non-farm payrolls. Like if you had a trade plan, there's no way you missed that. It can't be possible, right? It can't be possible for a bear and you were spending hours and hours every single day planning your short zones. There's just no way you could miss this. It's just, I don't think it's possible, right? So we know that is pretty obvious. And the interesting thing is this is the target. Cool. All right. So yeah. So whoever said take profit, take profits, great. But obviously, if you're selling and you're taking profit, you must be at support by definition, right? And then now use price action. So remember, this gray area is support of the market. That's market support. Okay? That was predetermined before. That was based on a leading indicator. An algorithm predicted that. Okay? It didn't, right? That's just an algorithm. So that's market support. And then over here, we have price. This is a price level. Okay? Price determined this. All I did at NFP was drag this across and say, well, somewhere down there, right? Okay. So now let's zoom in. How do you know if that would hold? You don't. Okay? But you know what you're going to do. Okay? See, I don't know anything about the future. I don't know anything about the future. So how would I know that would hold? I don't. I have no idea. But I know what I would do if I were me. I can control my behavior. I can't control the market. I don't know the future. I don't know destiny, right? But I know that I should look to sell there if I'm a bear. And if I was a bear, you know, hours and days ahead of time, it's still resistance, right? It's still a place to sell. And if I sold there, I know this area here is where it not only is where I should get out, but I knew on this day that that was the target. So that stuff I do know. I don't know if it'll hold. I mean, this could drop, right? It could do all kinds of things. It can do whatever it wants. Okay? Then I look at price and I say, oh, there's a convergence of price and market. And both of these things are supportable. The common denominator is S. Okay? Cool. So now let's drop into a smaller time frame. So the way I teach you to trade, fundamentals and bias and all that. Okay, great. So you should have this. If you're a bull, for example, okay? If you were a bull, just like this is obvious if you're a bear. If you were a bull, I would argue that this area here is very obvious as a potential buy. It's not that you do buy, it's that because of this being market support and this being price support, you know you're approaching a buy zone. This whole area is where you should be looking to buy. Which is cool because you were thinking about doing it here, and you probably actually right there. Let me resume this. You were looking to buy here. You may have got caught into this area here, but you probably didn't, right? Because you would have been thinking, well, it could do this. That is a trade plan. Did you get set up there? Probably not. Could you have pulled the trigger in there? Yeah, if you were really aggressive and you paid the penalty. But it sat here for 8 to 10 hours. Sure, you might have pulled the trigger there. Okay. But imagine on the first day of the month, and the second day of the month, and the third day of the month, and the fourth day of the month, and the fifth day of the month, and the sixth day, and now the seventh day. Okay? On the first day of the month and you're a bear, where would you have been thinking about selling? Well, you can see the analysis is still there. This is the first area to sell or to look for sell. And here's the second area to sell. Okay, would you agree with that? On that day, let me mark it with red. On the first day of the month, and you were already a bear, you would have been planning out your trades for the week and maybe even for the month. Why? Because it's the first day. That's where you do these things. Okay? So you would have thought, all right, I want to sell here. And if that doesn't work, I want to sell here. Those are areas of opportunity, your AO, right? So you're looking for a reversal pattern, and you want this. Or up here, you're looking for a pattern, right? And you want this. Under that context, I believe you would have found your opportunity to trade. Somewhere in here, you would have found a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower low, lower low, lower high, lower low. And the cool thing is, if this was your entry, this was your expected target. Cool. Nice. Done. Now what? Would the reverse be true? Could you be a bull in here? Yeah, in particular if you're already a bull. So I have to re-emphasize that nothing on this chart tells you to be a bull or a bear. Okay? It's so much easier if you are predetermined to be a bull or predetermined to be a bear. Because if you're predetermined to be a bull, you're just like, oh, well, I would definitely look to buy in here if I was a bull. Anything lower than that would be pretty frightening, and you probably wouldn't want to be a bull anymore. So this is a pretty important area. What about hitting your monthly target on the 7th day of the month? That says up from here. If that happened, and you can see this is the projected bottom for the month of August. So I would argue that we hit it early in the month. So that gives you permission to counter trend trade at a bare minimum back here, but probably because we're in a range now, if I were to guess, and there's nothing to this guess than a guess, but that would be the most interesting. See, the actual target would only be here in a counter trend trade, but why would you wimp out there, right? So you might as well just kind of, but it's your call. All of it's a guess. It doesn't matter. Okay, so all I'm suggesting is there was enough information here based on everything I've taught you over years and years and years. There's enough information here to have made certain decisions like this is an area, if you're a bear, you should take your profit. And as a bull, because of that, it's possible for you to look to go long. Okay. Now, is it going to do this? Or is it going to do this? How would I know? Okay. But if I were to guess, it would do something like that first. But I don't know. That's why you need to now have a general plan. Okay, so let me do the general plan in red. If this is your general plan, okay, that's called strategy. You believe it's going to range trade. Then you need to use technical analysis to enter your trades on a smaller time frame. In that case, you're looking to buy dips. You could do that, right? Comments coming through. Here they are, Barry, I think. Let's see. You got to scroll down. All right, so let me clear that up. Okay. Yeah, so make your decisions, guys. Okay. If you bought at support, would you sell your position at the first level of resistance before? Well, the answer to that is determined by your time frame. Okay. If your strategy is for that, why would you take 25 pips? Your strategy, your trade plan. Okay. So if you're scalping, sure, I would buy here and I would expect to take profit somewhere in there. I'd look left as well. Okay. But yeah, if you're scalping or even a spot trade, let's say, yeah, you could do this and take your profit. And then I would fib from here right to here, and I would look to buy somewhere in here and take it to the next level. Okay, that would be my next follow-up plan, so on and so forth. Okay. So this would be like Tuesday, Wednesday, Thursday, and I'll pull back on Friday. Okay. Monday, Tuesday, Wednesday, Thursday, Friday. Doop, doop. Yeah. Well, so now it's just strategy. Okay, your analysis would be generally the same, right? If you thought it was going here, now how do you trade it? We could have 10 traders trading it different. Let's say all 10 traders thought it was going here. Okay? So the first guy, he says, or gal, hacker girl says, okay, we're going to go up 200 pips. So, right, I'm going to buy it here off support, up, down, buy, up, down, buy, up, down, buy. Like, why is this so complicated? You made the hard decision, right, long ago that you're a bull. Then you get down to obvious support, which is weekly and monthly support, as I already determined, right? So here's a 5-minute chart. This is what I teach. If you go back to FX Bootcamp's first presentation back in 2004, I think it was, 5A cross, up, down, 5A cross, up, down, 5A cross, up, down, 5A cross. Okay? So that's scalping. Wayne, why bear market is volatile and it doesn't have a lot of dips compared to the bullish one? I didn't observe that, so I didn't know, Phil. It's interesting. I believe the VIX right now is very low, isn't it? Okay. And let's talk about how complicated this is, all right? Let's really put on our thinking hats for those that are ball traders. Okay? Okay, great. Let's really think. Why is volatility so low? Because nobody's trading. Nobody's even in the office. How can I make money on this? You guys are not on the right track. I'm setting you up for greatness and you guys aren't taking it. Oh my God, come on. I got a spoonful of sugar, man. Take a bite. Prepare. Oh, come on, guys. How do we make money? Ah, come on. Volatility is low. VIX is at 11. It's low because nobody's trading. How do we make money? Trade the VIX. Can you be more specific? Buy VIX. Nice. Woo! How about like when? Of course you can. The VIX, it's a futures contract. Well, the answer I'm looking for is when. Is sometime before volatility picks up. Let's just guess when that might occur. No, not with TradersWay. No, it's a futures contract. I think COB, I think. When will vol pick up, volatility? When will VIX rise? Right, well, it wouldn't be before, but during and just and after people return, right? Cool. And especially if there's an exogenous shock. That's a big boy word. I brought it up, tried to impress my wife today. We're having coffee on the back deck with a view of the lake, and there's egrets out in the water getting their breakfast, and the sun is just rising over the forest. And I say to her, there's an exogenous supply shock in pistachios. Think prices are going to go up. She looked at me like, what a jerk. Yeah. It's so romantic. It's true. It's true. The United States last night imposed a tariff on Iranian pistachios. Right? So anyways, yeah, so if we get some sort of exogenous shock, VIX is going to be high, right? VIX will go up. So look, like, dude, easy, right? Right? Cause and effect, guys. Now, is this somewhat related to my praying guess about yen? Does this have anything to do with the market moving sideways all summer and then suddenly I want everything to take off? Well, look. It's kind of the same thing, just a different asset class. So I think I have about 3 books in my brain. Like if I took a year off as a sabbatical, I would write at least 1 book, but I have 3 in my brain. And one of them is talking about stuff like this, the Newtonian physics worldview. But anyways, but yeah, it's all the same thing to me. But do you see the logic? Like, so I don't know the future, right? We just discussed this. I have no idea what's going to happen in the near future. But you could possibly say, okay, volatility is low, I think. But my observation of euro dollar says this thing's been moving sideways for 3 months. For almost 100 days, it's basically been moving sideways. So by definition, that's kind of low volatility. We lack a trend. It's just sideways. Generally speaking, the price is about the same over 100 days. So how could I measure volatility? Well, one way I could use the VIX. Now, the VIX is measuring the S&P 500 based on how many options are purchased to protect stock positions, but it's another financial trading market, and we'll say, okay, well, if that market has low volatility, then I could probably correlate that and say, well, yeah, okay, then by definition, euro dollar, under these circumstances, I could extrapolate and say, well, it looks like low volatility, and if the S&P 500 also has low volatility, then I could probably say, based on my use of VIX, that this is low volatility. Cool. Right? And then I can look at the VIX and say it's 11. Well, 11 is historically low. And when you're historically low, it's typically a sign, is what the traders will tell you, of a turning point in the market. Well, okay, I could believe that nonsense, sure. Is that really what the algorithm is saying? Is it causational or correlational? I think it has more to do with people going on holidays for the summer. And that the VIX is at 11 probably is irrelevant, but us really smart humans like to pretend like, oh, it's VIX signaling a potential low. I'm like, well, it's not like record ice cream sales made temperatures go up. Right? It's not like every May people start to buy more ice cream than they did in February. Therefore, it gets hotter outside. You understand? Like ice cream sales signal droughts. Oh my God, look how much Haagen-Dazs is sold last month. that means there's a drought coming. Buy wheat futures, right? Like, whoa, 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 right? So I think it has more to do with humans going on holidays, and when humans come back from holidays, they're going to trade, right? You see what I mean? But other people will say, well, it's because it's signaling you. Okay, I could probably make the trade without even knowing the number of the VIX. But people will say, because VIX is 11, it'll probably indicate a turn in the marketplace. Well, whatever, dude. Believe what you got to believe. Okay? But I could say, well, if that is low volatility and VIX is low volatility, what creates the low volatility? Cause. And what's the effect when the cause goes away? You see, is it that train of thought that makes you money as like a hedge fund manager? Or is it the video game style of boo, 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 right? Well, what's going to make volatility return? A, the market comes back, and B, it would be very helpful to have an exogenous shock. And the interesting thing is, when the market is looking for an exogenous shock, almost always something happens. And then on CNBC and Bloomberg, they say, did you see that exogenous shock? And everyone's like, woo! And all of a sudden we're at 33 on the VIX, and the yens are moving like crazy, and everyone's like, oh my God, nobody saw this coming. And I think it's just a whole bunch of people standing around going, are you going to trade? Are you going to trade? You trade first. No, you trade first. No, you trade, right? It's just like the pit. Buy, sell, I'll take a 2 at 20, right? It's just a big giant pit. So we're all standing around like, when are you going to trade? When are you going to trade? Oh, did you see what Trump said? Boom, trade. Woo, and everyone's trading again because they're all standing around waiting for someone else to trade. Suddenly there's a reason to trade, and then everyone trades, volatility returns, and everyone's sitting around like, oh, I guess I got to get in the market. The thing is, you're getting in the market now because you're wicked smart and unusually good looking for your age. Yeah, I had to throw that in. Yes. Yes. Used to be. That's a great word. Used to be. All right. Is that right? Dude, you know what the funny thing is, if you don't mind me talking about myself for a second, I used to always be the youngest person in the room, and I looked young. Then it got to be like adult age, and I looked young. And then a few years ago, I just went from young to old. It's amazing. But you know, well, it's not the merits. You know, honestly, I'm diabetic, and I got to the point where I had to take insulin, and that stuff is nasty. Nah, well, yeah, stress did it too. Yeah, I went through a stressful period. But anyways, insulin's a nasty stuff. So like, I'll give you an example. I started taking insulin. I gained weight immediately. And you'll say, yeah, well, everyone says that. Well, I'll tell you what. I got back from Harvard, and there was a mix-up on my insulin. So I went about a week without insulin. Okay? No, I don't eat sugar. Okay? Yeah, I know. Guess how much weight I lost? I didn't change my diet. I didn't exercise. Nothing changed except I wasn't on. Yeah, I generally only eat apples I don't eat bananas generally, but yeah, I try to stay away. Anyways, I went 1 week, 7 days without insulin. I lost 6 pounds. Then I got my insulin, and about 3 days later, I got my 6 pounds back. Like, holy crap. Yeah. The other thing that happened to me when I started taking insulin, my feet were 9.5 size since 7th grade. So I'm, what are you, 14? So 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37 years. Right? Whatever. Right, minus 14. So anyways, for 25 or 30 years, no, I generally don't eat carbs. For 30 years, my size were 9.5. I started taking insulin. My feet grew to 10. I'm like, dude, none of my shoes fit. I'm at 35 years old and my feet are growing. So I buy like thousands of dollars worth of new shoes. All my dress shoes, all my shoes had to be replaced. And then all of a sudden they're too tight again. I'm like, what? So I go to the shoe store, they measure my feet, and they're like, well, your feet are 10.5. And I'm like, what? No, you don't go a full foot size on water retention. Come on. Yeah. And guess what? My shoes are getting tight again. I'm going to be size 11 soon. So anyways, whatever. Insulin's bad, man. That stuff's nasty. But I'll tell you, I test my sugar every day. I didn't have insulin, and I'm definitely diabetic. Then I take the insulin. Insulin definitely helps. So what can I say? All right. So anyways, I hope I'm trying, over the last few weeks of my return from Harvard, I hope I'm challenging you to think about the market in a sort of professional, institutional way. And I hope it makes a difference. Okay. Yes, John, or whoever said it. Yeah, my diabetes is great. The cell walls in my bloodstream absorb sugar inefficiently. I know we all have flaws. We all have mistakes. Right? I should have a better diet. I should exercise more. Actually, I have a kick-ass diet. I don't exercise though. But the thing is, it's simply my cell walls don't absorb the sugar efficiently. Like, oh my God, that's gee whiz, right? Sucks. Yeah, I know. Excuses sucks. So anyways, it ruined my life. I would have been an astronaut. I suppose I could have been on the space shuttle and died. The other thing that could have happened to me is I signed up for the Navy. I would have flown through the whole Second Gulf War. So maybe I would have been shot down there. But I have a friend that flew over Afghanistan for about 2 years. You get on this plane on an aircraft carrier, fly across Pakistan, get to Afghanistan, fly around for 2 hours, and then fly back. And he's a war hero. And I'm like, okay, I know you're away from your family and stuff, but that was like driving a bus, bro. You weren't outdoors and killing bad guys. What were you doing? But I don't know if that's harsh. But I also know other people that were in the military and have nightmares at night, at least. Yeah, and I'm like, it's not the same, is it? Like, what did you do for 2 years? You racked up hours so you can fly for Delta. Yeah. You were in Afghanistan, 3 tours. Yeah, you're in the valley. Anyways. Oh, Iraq. I think Iraq would be more interesting. Anyways. So I don't know. I don't know. I shouldn't say that though. I mean, he did theoretically risk his life, and he did leave his family. So yeah. All right. But he's got a pretty sweet job now with pretty sweet benefits, and he doesn't have problems walking in crowds. And I don't think he has nightmares at night. That's all I'm saying. All right. All right. So let's get going. Let's go through here. So once again, it's still a quiet period of time. It's going to wake up, and the risk is you're lulled to sleep. Is that right? I didn't even know they had surface-to-air missiles. Shot down a C-130 Hercules. Huh? Get that? It's crazy. What I was saying, John, was the risk that you face during a low volatility time is that you miss the breakout because you're just snoozing. Okay. Well, I guess I should have left that there. So it's back up. Wayne, on a swing long, where is the target above the prior? Well, your target's always going to be these red zones. Well, I don't remember hearing any stories about SANs, but yeah, I suppose if you're flying across enemy territory and your radar lights up with surface-to-air missiles, yeah, that's no joke. But I've never heard that story from him. I've heard other stories of other heroes, like David Pegler, for example, told me some stories being a sniper. And so he can tell me lots of stories about him and other people. I didn't hear a surface-to-air missile story. But nothing like coming out of the Navy and making $250,000 a year flying 777s. Makes the Navy look like a pretty sweet gig. But then again, that's why I signed up for the Navy. All right, so this was the plan, if you recall, from non-farm payrolls up, down, long, gone, and this is the target. Okay. It's cool. I can't see this new setup. I can't read your names. Look at that. I can't even read the names. Ross. I think I know you, Ross. Of course I know you. There's been a few Rosses over the years. I think there was a Colin Ross. I see this new layout makes it so impossible to see the names. I guess names would be important to a chat. So anyways, I apologize if I've offended anyone. Anytime you're put under duress and taken away from your family and loved ones, and risking time, life, and all that for your country is a big deal. So I apologize if I offended anyone. Well, okay, you can change in the settings, guys, let's do this. In the settings in the corner, this isn't touch. In the settings, you can, under the chat, you can click it, and down here you can change the font size. I already have mine bolded. I don't know if you can see that because I can't see what you can see now. But anyways, you can change that to make it bigger if you're having trouble seeing the chat. But the thing is, for me, it makes the names like light gray on top of white, so I can't even see that. Yeah. All right, cool. So anyways, this is my trade plan from 3 trading days ago, 4 trading days ago. I'll remind you about it. Okay. This could actually go back a week ago, actually longer than a week ago. So you see this? You see how it's not perfect? Like this goes beyond it. This kind of just barely goes beyond it. To go back in time, we were looking at this pivot before it was drawn. We could see it that coming up this in a few days, that if we didn't get a higher high and we didn't get a higher low and we closed about where we were, so we might have been doing it around here. So we closed somewhere around this area without making a higher high and without making a lower low and keeping the close about the same region, then we know where the central pivot's likely to be, guesswork, like generally we have a good sense of where it'll be. And based on the formula, then you can look at, it does the central first, and then it looks at S1, and then right between the central and S1, right, you just take this and divide them by 2, and you get this pivot. So all of this is guesstimate, but you have a reasonable certainty as long as this closes near, because it's high, which is this, low, which is this for this period, and then plus close, which is somewhere around here. We don't know where this is. This is going to be the big determinator, right? Divided by 3. And you get this number, and then some other basic calculations, you get this number, and then you take this number and then this number and add them together and divided by 2, you get this number. So as long as the close is about where you're guessing, near the last day, if there isn't a major change, then you have a pretty good idea where these things are going to be. So on that day, we said, well, somewhere around here, you could be buying. We don't know when, we don't know if it'll work, we don't even really know why, but we just know if you're a bull, you're going to look at this, 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 and see the 50%. And you can see that it's going to be next month's monthly M2. So therefore, right, or yeah, but we don't need to add even further. But as Peter says, there were other reasons probably that went into this analysis. But long story short, you could have bought it here, you could have bought it here, and you still could have bought it here. And I believe we set this up for a counter trend trade. Is that true on the counter trend? Yeah, we did, right? So we say this was a buy, and we did say this was a sell. And then, of course, if you're still a bull, that's still M2. So you can see, guys, if you have a bias, the opportunities to trade get better, and they become more reliable. It's when you're unreliable, meaning sometimes you're long, sometimes you're short, you have no idea why or where or when, and if you see a green candle, it's time to get excited, right? And then if the next one's red, oh my God, now I got to be a bear. If you're trading like that, then you're going to find life very stressful and very complicated, right? But when you have a bias, you can say things like, I'm simply looking to buy. And where do I buy? I buy at support. Where's support? See how logical it gets after a while? It's very logical. Okay. So tell me the price that you would have preferred to buy it this month, this week. It's Tuesday, right? So like, let's say on Saturday, you were thinking about this. You would have said, I want to buy it, I don't know, here. Cool. Where's your target, bro? Here. Where's your risk? I'm going to say the risk is R1. First of all, it's technically resistance, and this does look toppish. I'm not sure if we're going to break the range. In my experience, by the way, over the years, is that the ends like to break out, totally confirm you're completely right on the ends going up, and then they take a nosedive. And if you were sloppy with managing your stops and stuff, you get punished a bit. Then you walk away and you're like, oh my God, I was totally wrong. And then boom, it takes off and you're not on it anymore. And you're like, oh my God, I spent 12 weeks setting up these trades and they took off without me. So just be careful. But if you happen to be waiting somewhere in August for the ends to go up, at some point you got to be buying one of these, right? This is about a 618 Fibonacci retracement. It's a monthly entry, a monthly and weekly support. Don't be shocked if it does head up 500 pips. I'm not saying it will. This could just wimp out and collapse, and then we'll say, see, it's just too early. But dude, this could take off. It might have already started. The question is, when are you going to make your decisions, right? And the funny thing is, you're still, many of you are probably still not fully making the decision, but the decision might have actually been down here. Okay, so I'm just putting it in the pipe. You have to smoke it. All right, CAD yen. Okay, so now talking about the yens, I'm a correlated macro trader, which means if I'm buying Aussie yen, I'm buying CAD yen. Okay. Now, let me ask you something. What do you think my bias is for oil? Okay. 4 or 5 people say bull. Okay, cool. How long have I been a bull in it? Like a day, a week, a month, a year? Okay, cool. Okay, cool. Like, that's called fundamental analysis. Okay. Doesn't take a lot of work, does it? Like at some point I made a decision. And if you've been around me a long time, you'll notice like every so often fundamentally, I show up and I just say, you know what? Everything might have just changed. This is where a bull becomes a bear, or a bear becomes a bull. And I'll give all the reasons why. Okay. And I think it was like maybe 2 years ago, maybe a year and a half ago, where I said, okay, this might be a point where all commodities go up. Does anyone remember that? I don't know if it was 2 years ago or about 2 years ago or something, but I'm like, I think like everything might go up now. Everything, oil, uh, iron ore, wheat, soybeans, pretty much everything. Not gold, because gold is not a pure commodity. It's mucked up with human emotion. Because you'll always get people that want to live in caves because spaceships are coming, or the end of civilization is coming, or a zombie apocalypse is coming, so they want to buy gold. Oh, all right, that's not okay. Right. So, anyways, there was a time, and I'm like, yeah, this is where I think maybe potentially everything goes up from here. Well, do you think that impacts the way, that I think about CAD yen? This is supposed to be CAD yen. Now, it might not be correct, but it's a decision. Okay. So 2 years ago, we were down here, huh? What do you think of that? When somewhere in here I say, you know what? This may be the bottom. This may be where all commodities go up. Okay. Well, Kelvin says Master Wayne, but what I'm trying to say is it's not Master Wayne. What I'm trying to say is there is enough information out there. I'm encouraging you to go out and find the information because it's not even really hidden, right? It's out there. It's available. And with some basic thoughts like volatility is low now because everybody's on summer holiday. But when they come back from summer holiday and trade again, volatility will go up. So you could buy now when the market is artificially low, and when everyone comes back, you make money. You see? Like, money. No money, money. No money, money. Why? Because you're the one person to think like cause and effect. Cause and effect. Local macroeconomics improves. The Fed no longer needs to do quantitative easing. That might be important. Macroeconomics have improved. It's no longer the end of the world. Capitalism didn't fail. Everything was exaggerated or lingered too long, one way or the other. Maybe we've hit bottom, and maybe everything from here is less bad. I'm not even saying good, just the worst is over. Or what do you call that when you're doing economic cycles? Right? You're here, or you're here in business cycles. So if you're a buyer here, remember, everyone is sour during this period, right? Everyone is sour. This is the end of the world as we know it. It's over. We're doomed. It's depression time. And someone says, really? Do you understand during these periods here? This is like when I was telling people when the Dow was at 8,000 to buy the Dow, and it wasn't even picking a bottom. We had hit like 7,500. It spiked up to almost 10,000 and dropped into a 50% Fibonacci retracement between the ultimate low, the higher high. And you're like, really? Is that just a 50% retracement of an engulfing candle, sort of like a 1, 2, 3 reversal pattern? Yeah. Yeah. Oh, for sure, eh? Hammock, like, remember, none of this was predictable, right? You're like, are you What? What do you mean it wasn't predictable? Anyways, right? And I don't mean I'm commenting on all the experts on TV. Amazing, right? But anyways, it was very predictable. You can get into these things, right? Especially when everyone says it's over. Like, that's it. You can't trade VIX anymore. We're at 11. It's dead. We're going to move sideways forever. There's never going to be volatility again in the Forex market. There's never going to be volatility again in the commodities market. We're never going to have volatility again in the stock market. Like, really? Right? Yeah, but isn't that what you're seeing? Isn't that what you're hearing? Isn't that like the word on the street? That it's all algorithms and it's all high frequency traders and it's never going to happen again. The trade is dead. Nothing's going to happen. You can't make it here anymore. Oh my God. Right? So anyways, do you understand, like, during this period when the stock market did drop 50% and then started to show signs of life, and I was doing speeches like, what do you think quantitative easing is supposed to do? It's supposed to drive asset prices up. Define asset prices. How about the stock market? And how about the housing market? Those seem like asset prices to me. So I said at the time, you cannot save your way into prosperity. If you lost 50% of your net worth because you never got out when the market was crashing, probably because your stupid idiot MBA over at that retarded wealth management firm that was protecting his $300,000 a year salary by telling you to stick it out, because if you pull out your asset, it doesn't make money anymore. And the guy doesn't even have an economics degree. He has some sports medicine degree from the University of Florida. You're like, are you retarded? This guy manages your money. Now he's telling you to stick it out because it's just market timing. So you lost 50% of your net worth. Now you're here and you're out. Gee whiz, this is where you're supposed to get back in. And how do you know it's going to get back in? Because the Fed spent $3 trillion to prop up stock market and housing market prices. So who do you think made money here? Rich people. Now we have this 99% and all this kind of stuff. Well, if you had any money to begin with, you could have stuck the money in the market there, and now your house is up 50 to 100%. The stock market's up 300%. Right? These things are not overly complicated, even though you'll see all the experts will tell you it's overly complicated. And the people on TV, which are also experts, will tell you it's so complicated you can't figure it out. You're going to need to hire an expert. But if you have a little bit of education in these subjects, which I'm providing to you for free, you say, well, you know what? It's not actually overly complicated. If the government is going to stick $3 trillion into the market's probably going to go up, and I should probably be in it. So some of that $3 trillion comes to me. How many people understand that? The government puts $3 trillion into the market, so therefore you should probably be in the market. Some of that $3 trillion goes to you. Why do you need an MBA for that? So why am I talking about this now? 10 years later, right? Well, by the way, it wasn't 10 years ago at the time. I was there every single day, by the way. Every single day I was there with you guys. All right. So what are we talking about now? the same idiots are telling you like volatility is down, nothing's going to happen, you can't make any money, nothing's going to go anywhere. And they're all fools because you know that can't possibly be true. There's nothing happening now because nobody's in the market. Why are they not in the market? Is it a zombie apocalypse? Did the financial system fail and there's no market left? Or maybe are they at the lake and they're not trading? Right? So if it's simply like they're not trading because they're at the lake, then what happens? Let's just guess. What happens when the billionaire or the hedge fund manager or the institutional investor, what happens when they come back from vacation? They might do something. Woo! Cool. So how do we make money? Yeah. They're like, all right, I'm back. Got to make my Christmas bonus. By the way, were they sweating in March about their Christmas year-end bonus? No. Were they sweating about their year-end bonus in April? No. Were they sweating about their year-end bonus in May? No. Were they sweating about their year-end bonus in June? No. Were they sweating about their year-end bonus in July? No. Are they sweating about their year-end bonus in August? No. But then when they come back, are they thinking about it in September and October, November? Like, the closer we get, the bigger the deal it gets. Like, oh my God, I only got like 12 weeks left or 16 weeks left. I have like 16 weeks left and I got to hit my bonus number. Like, oh my God, I got to get going. Let's put some money to work. And it seems like now we went from overly complicated to overly simplified. But if my 150 years of experience in the markets have taught me everything, people is stupid and it is oversimplified. Okay? You're probably a lot smarter than the person on Wall Street managing $500 million. You're probably smarter than they are, right? And you don't know that yet. But when you finally get there and they're like, here's $500 million, and they're like, wow, you're like the best trader we've had, like, ever, right? You're like, why? I buy dips, and the trend's up. I buy dips. What's so complicated about that? Oh, well, the last 5 guys, right? So anyways, you got this. You need to think about it. You need to plan it. And the rest is really easy technical analysis, right? Okay. So you could say, as long as we're above this line, I'm a bull. That's the for sure. That's your Alamo. Your second one is going to be, what do you want to do? Everything above that. Okay, good. Now you're a bull. Ready? Hardcore analysis. Great job. So now what do you want to do? You're a bull. I want to buy dips. Great. Okay. This was an up, down. This was a dip, by the way. This is it. So you got a longer-term plan. Look at your longer-term plan. Is this a role reversal? Hopefully. Okay. By the way, you should know with a basic level of technical analysis, this is a buying pivot. You knew that on July 31st. That was very viable, by the way. You could have bought, let me clear it out and do it again. This you knew, you could have bought that at the very end of July if you were a bull. That is very, 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 very plausible. Hassan says, can you be successful or profitable without technicals? You can be profitable, but probably not filthy, stinking rich. Successful depends on how you define it. But like, if you're going to be the master of your domain and an expert in an industry, why would you skip fundamentals? Especially all the forward thinking stuff that I share with you is fundamentally based. So why don't you just learn both? No, I know. I know. So anyways, this is very, 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 very predictable and tradable if you're already a bull. Okay. Second of all, this drop here, by the way, you see how I drew it? I can tell I drew it before the month of August. So I must have drawn it about here. Okay. Or maybe here, but can you see how I'm off? Why did I draw it up here? By the way, looking at it, I was exactly right, but that's besides the point. Okay, so I'm actually to the pip correct, but that's not the point. That's luck. Why is this off? It's off because I was using predictive pivots that were calculating probably based on here, the close being here, or somewhere else, or maybe I did it here or something. But I did it before we actually printed the pivot. Then the pivot turned out to be here. But the other important thing is this wimping out here is very, 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 very predictable. As much as this is predictable for it to go up, this is predictable for it to go down. What I can't tell you is, are we going to be here? I have no idea. Or are we going to be here? I really don't know. But what did I predict? This is a bottom. We go up here. This creates a higher high based on this. So therefore, if I were me and I was bullish, I'd look for that, a retracement into the roll reversal, which is a 50% Fibonacci retracement in what looks like to be an uptrend that started on the monthly M2. Therefore, buying the dip should get us up in here. Oh my gosh! But that's just technical analysis, and we've already done it. So the fact that it's gone from the support to the higher high, or up into here, down in the M2, up to the M3, down to the central, and now maybe heading up. Well, what else was it supposed to do? Because the funny thing is, I don't know any other patterns. It's like, well, isn't that what it's supposed to do? Now, it can fall here, and that would be technically meaningful, wouldn't it? If this now did this, you'd have to change the assumption from a trend, uptrend. You'd have to change the assumption to a range trend. Okay? See what I mean? All right. I think that's enough for today. Let me have a sip of my slow brewed coffee. I hope you become an amazing trader. I hope you know that I really would like you to be a success story. And remember, 95% of people ignore probably 99% of everything I say. And some of the times I'm joking, and some of the times I'm wrong, and sometimes I'm an idiot. But beneath all of that, most of the time I'm trying to give you information that you probably don't get anywhere else. And I'm not trying to make myself look smart. And when I come across arrogant or something in that way. What I'm trying to show you is you can do this. Okay? You can do this. This is something that you can do. And that's what I'm trying to get across. If these pieces can come together, it's not that I'm so brilliant that I figured it out. No, it's that the information is there, and with some education and mentoring, you can learn how these building blocks go together, and you're like, oh, cause and effect. And if I can have the hypotheses of cause and effect, and then I use technical analysis to confirm or deny the hypotheses, I might be able to accurately predict the future, and of course, along that way, make decisions that make me money. That's what I'm trying to get across. And then it's not brilliant once you know, then you're like, oh. Okay. So why don't you bring a friend? If you were a kind friend and you had a friend that traded currencies, you should bring him to these webinars, bring her to these webinars. Let's change the world. But let's start with your world first, huh? So anyways, peace on earth. May the pips be with you. May your profits be above average. I'll upload this to YouTube. Maybe give it a like or subscribe and all that kind of stuff. And I will see you tomorrow. Okay. Remember, you need to finish the swing trading course. Probably this week, I'm going to send out the invitation for you guys to join. But I only send it to people that have bought the all course package, because I'm assuming they did the swing trading. And then, of course, those that signed up for swing trading. So once you've completed that and you know how to swing trade, then you can get together. You can get together with the group. And so we'll start very shortly, probably a couple of weeks. So I'll send out those invitations. And yes, I contacted my team at TradersWay in regards to the day trading course. So my plan is to go outside. I'm going to reload my coffee. I'm going to sit outside. I'm going to enjoy a cigar, and I'm going to start planning again. I know I did a lot of it, but I did a lot of it 6 weeks ago, so I need to refresh it in my mind, at least, in my spirit, to be able to do that. Okay. And then MetaTraders is also on my mind. So those guys are active trading, doing their job, and I need to regroup with them. How many people are interested in that? Where I teach you how to be a portfolio manager. You take on some responsibility to make decisions on a currency pair. The way that works is you put $5,000 into an account at TradersWay. Okay, that's $5,000. Then you pay me money, and I think that's $1,200. So now you're into it for $6,250. That's pretty reasonable money. 6,000, right? No, 6,200. That's some real money, right? What we do on the first day before you even start, well, here's what we do. You pick a currency pair that you like to trade, something that I have available because some people have picked it, right? So what you do is you pick the currency pair you want to trade every single day for the next 3 years. And you're only allowed to pick up or down. You're a bull or a bear. So become a portfolio manager, let's say on, let's say CAD yen. You decide for the next 3 years you want to be a long only CAD yen portfolio manager. And you're making decisions for the portfolio on the CAD yen only, and you can only buy. You're never, ever allowed over the next 3 years to sell. So it really filters your job down to identify levels of support and then use technical analysis to buy and take profit, or buy, move your stop and hold forever. Whatever your strategy, I don't care if you're scalping, spot, swing, trade, whatever. You're the portfolio manager. You make the decisions, but you only trade CAD yen and you're only a buyer. But what this will do is, first of all, get your entries better. Second of all, get you better at tracking things like the central banking policy of Japan, the central banking policy of Canada, commodities that affect these, these two, and you become a real expert in CAD and yen. But you get really good at buying at the right price because you're only a buyer and you're only looking for support, and you start building things like patience and discipline. You're not chasing candles. You're not, it really brings a true focus. But what ultimately it'll do is it'll lower the volatility in your portfolio and trading, because you're not long and short, short, long, long, and making money, losing money. It brings consistency, it brings control, it brings patience, it brings discipline, it lowers your volatility, and I think on the long run you should have decent returns. So that's the first thing. You get real responsibility for the next 3 years. The second thing is that $5,000 account that you trade, we bumped that up to $25,000. So what does that mean? Well, if you produced 5% return per month, 5%, which means you double your money, roughly speaking, right, in a year because of compound, right? Great, fine. What does that mean? If you start at 5,000, at the end of 1 year, you have 10,000. At the end of the second year, you have 20,000. At the end of the third year, you have 40,000. See what I mean? You grow your $5,000 account to 40,000 in 3 years. Statistically, that's amazing. If you took that somewhere, you could probably get a job. You could probably start your own. But in this case, we bumped your account from 5,000 to 25,000. So what does that mean? We'll get to the losing part. What does it mean if you start with 25,000 instead of 5,000? Well, at 5% per month compounded, at the end of the first year, you have 50,000. At the end of the second year, you have 100,000. And at the end of the third year, you have 200,000. So the difference is, instead of at the end of 3 years, you have 40,000. You have 200,000. What? Okay. But you don't get to keep the 20,000 that we put in your account. You see the difference? So you only have 180,000 profit from your $5,000 investment. Okay. I'm sorry. And how much of the profit do I get to keep? How much profit of your 200,000 goes to me? You're not even going to give me anything? Oh, I'm going to charge you $200 a month. Is that fair? You keep the 200,000. Well, sorry, you keep the 180,000 profit, and you pay me $200 a month to manage the portfolio manager team. Okay? Right. The 1,200 is for the first 6 months. 200 a month. Okay. Right. So here's the next question. If you lose money, what happens? Well, if you're a professional trader and you lost 50% of your money, do you think you can raise a second fund? No. All right, so here's what happens. You lose 20% of the 25,000 and you're fired. 20%, not 2. If you lose 20%, if you have a 20% drawdown, you're fired. It just happens right away. Your account is shut down. We take your 20,000 back, and you're fired. You're dead. Dead meat. The next question is, what if you don't have the 5,000, but you want to try? You're just fired. Yeah, no cornfields this time. Okay. All right. What if you don't have the 5K? Yeah. It's probably going to be difficult for you to take a track record on a demo account and start your own fund. You know what I mean? Like, it's not as good, but I'm willing, especially in the beginning. I don't know if I'll do this forever, but if you think you're ready and you're willing to make a long-term commitment, then we can do it on a demo account. So in that case, you need $1,200 for your first 6 months, and then after that, it's $200. And we'll give you a portfolio to manage, and you'll set up a $25,000 demo account, and you'll trade it every single day like it's real. And maybe, when you have the 5K and you want to do it with real money, then we can do it for real. Okay? I hope that's fair. So anyways, we have a few guys, and so probably next week I'll restart that as well. They're trading on their own. Yeah. And the cool thing is, guys, all you have to do is trade on MT4. And my system plugs into the server. So every time you buy it, let's say your CAD yen, every time you buy the CAD yen, I'm updated in real time. And we're building your track record. So I can look at your drawdown, your average profit, your average loss, your monthly return, percentage-wise, per pip, per trade. I have a complete, absolute, total history, and you have an absolute, total, complete history of your trading, and you don't have to do anything. It's all, we hook right into the MT4 server for your account, and everything is tracked live, real time, without you doing anything. All right, I forgot this was recording, my bad. So I gotta go, yo. But all of that's coming. So the day trading workshop, cool. MetaTraders, we're gonna regroup. So if you're interested in that, you'll need to email me. Let me know what currency pair you're interested in and your direction or bias. And remember, it's 3 years. We don't need posers. We don't need people just coming in, try it for a little while, waste everyone's time, and then leave. We're not interested in that. But if you're serious about making a career out of being a professional trader, managing other people's money, or maybe working at a bank or something like that, because think of it this way: if you got a job today at a bank that needed a foreign exchange trader, they're probably going to give you Hungarian francs and some Polish zloty, and maybe do Czech kroners, and you'll be Eastern European emerging market portfolio manager. And you'll probably do some Latvia and some Estonia, Lithuania. Throw that in there a little bit. They might ask you about the ruble from time to time, right? And that'll be your job. This is kind of leading to that. So in your job interview, they'll say, well, so what have you done as a currency trader? You say, well, I spent several years as an amateur currency trader, and I was mentored by one of the world's greatest traders ever. And then I got a position, a portfolio management or PM position at MetaTraders. I oversaw the CAD yen long only portfolio, and I grew the account by 2,000% over 3 years. But the thing is, maintained a very, very low drawdown and had very, very low volatility, which shows that over the course of those 3 years, even though market conditions changed and seasonality, geopolitical risk, and all these things that come through, the normal markets, I maintained very steady returns and very, very low volatility. And they'll say, oh, that sounds great. Okay. So anyways, that's what that's all about. I got to go. I got a tickle in my throat, and I'm not quite healthy yet. So I got to start working on the day trading program for you guys, and I got to start working on the swing trading program for you guys, and then I got to start working on MetaTrader portfolio manager program for you guys. If it wasn't for you guys, I'd have a very boring life. So thank you for making my life interesting. Cool. See you tomorrow.